RealtyTrac, an online marketplace for foreclosure properties, says many of the foreclosure procedures that were stopped late last year will likely be restarted this year. Rick Sharga is a senior vice president at RealtyTrac, and he joins me on set. Rick, welcome to Bloomberg's Bottom Line. Always good to have you on. Thanks for coming.
Always great to be here.
We were both sitting here watching Melissa's interview with the Lieutenant Governor of Texas, Lieutenant Governor Dewhurst. Foreclosures coming up today. The number of homes receiving a foreclosure filing climbing, according to your data, about 20% this year. We talk about a lot of states, Texas, Illinois, California, New Jersey, a lot of them having financial crises, and that can be directly linked to the foreclosure problems. Why?
Well, I think obviously the housing market's been an anchor on the overall economy. When you get to the state level, you see all these properties being foreclosed on. Nobody's paying property taxes, or property tax values have dropped and been decimated so that the municipalities are having a really difficult time getting the revenue they typically get from real estate transactions.
Rick, are we going to see a sense where we have lots of cities around this country who, for decades or more, are still going to be in ruin?
It's going to take areas that were overbuilt and grossly overpriced a long time to come back. The Central Valley of California, places like Stockton and Merced, places outside of Phoenix, places like Las Vegas, places in South Florida, that were way overheated when the housing market was in boom mode.
Maybe too overheated?
Way overheated. And in some cases will probably never come all the way back.
With the sobering news that this year, you say, is going to be the peak.
We hope this year will be the peak. Foreclosures are going to be driven this year by unemployment, by economic displacement, where people are working part-time or not making as much money as they were and can't afford their homes, by weak demand, by weak lending, and by an overhang of properties that should have been foreclosed on in 2010, but were delayed and will hit the numbers in 2011.
And they were delayed because of some of the legal situations,
the robo-signing issues and the paperwork issues. So the banks delayed, but we have heard since then that they've all resumed foreclosure processing, so we expect to see those numbers accelerate.
Rick, we were talking during the commercial break. If you had your home foreclosed on, that means that you undoubtedly took a hit on your credit.
Absolutely.
Your credit rating suffered because of that. Then that means you probably will not get money to buy another home, which means that you're probably going to have to be a renter. But that's easier said than done, because you and I were talking, and I just facetiously said the term subprime renter. That might be what's going on here, because then if you want to rent an apartment, you have to have a place to live. You may get charged more rent because you're a higher risk.
You do become a higher risk. Your credit score takes an awful hit in a foreclosure or even a short sale, so you're going to wind up putting more money down on a security deposit. But the majority of people who are foreclosed on do wind up renting. A certain percentage wind up with their families and friends, and a small percentage, unfortunately, wind up homeless.
Where is the pain of foreclosures going to be most acute? You talked to us about Central California. What are the areas in specific?
Well, you're talking about places like Stockton and Merced that were at the very beginning of the foreclosure problem. Other cities, Las Vegas, Phoenix, Cape Coral, Florida, but cities we haven't talked about in years past, places like Boise, Idaho, and Provo, Utah, and Portland, Oregon, and Charleston, South Carolina.
Is that most specifically because of the unemployment numbers?
Specifically because of unemployment. So the pain is spreading, basically.
We have, when we're talking delinquent, we're talking mortgages that are what, two months delinquent? Is that the standard?
Technically, when you're 30 days past, you're delinquent, but we talk about 5 million loans being seriously delinquent. That's 60 days plus.
Are we getting a sense that some banks are willing to help people, or at least trying to keep them in their homes?
The banks issue a lot of reports about massive numbers of loan modifications. Anecdotally, what we hear time and again, and I have people come up to me all across the country and say this, is that they can't get help from the banks. They're being foreclosed on while they're trying to negotiate a loan modification. So the system is dysfunctional. It was really never set up to handle these kind of volumes, and a lot of people, unfortunately, are paying the bill for that.
Is the template going forward then that you have to have a worst case scenario in order to figure out what the new paradigm is?
That's probably not a bad way of phrasing it. We do think this year will represent the market bottom in terms of peak levels of foreclosure activity, probably housing market prices bottom. And this will be the year we look back on later and say this was probably when the recovery actually started.
Rick, in our last 30 seconds, is this all about jobs? Can this all be linked to a lack of employment in this country?
We need jobs so that people can afford their homes. We need jobs so that people start buying homes again. We also need the banks to be willing to lend money to good credit risks.
But in that as well, going forward, do people now realize that they can't use their home as an ATM?
Well, we hope. And we've seen an awful lot of people get themselves in trouble by taking more and more money out of their equity.
All right. Rick Sharga of RealtyTrac joining us here on Set New York. Thanks so much. Always good to see you. Thank you, Rick.